The probability of achieving profitable growth is heightened whenever an organization has a clear growth strategy and strong execution infrastructure. Welcome to another edition of the Nigerian Investor. Last week, we talked about Flour Mill's investment in capital expenditure and its positioning for future growth. Today, we want to talk about DANGCEM operational expansion plans. Dangote Cement Plc, the most capitalized stock on the Nigerian bourse and the largest cement producing company in Africa, has restated its plan to increase its production capacity across the 3 state-of-the-art plants in Nigeria, as well as new capacity across Africa from now and running till end of 2017. During the firm's fact behind the figures held at the Nigerian Stock Exchange, the group managing director of the firm, Mr. DVG Edwin, stated in the firm's roadmap for expansion that the cement company will by 2017 have increased its production capacity to 62 MTPA. Nigerian capacity would have increased to 38 MTPA, with Obajana having 13 MTPA, Ibeshi 12 MTPA, Boko 4 MTPA, Shagamu 6 MTPA, and New Benue 3 MTPA. Additional capacity across Africa, with Zambia having 1.5 MTPA, Tanzania 3 MTPA, Kenya 1.5 MTPA, Cote d'Ivoire 1.5 MTPA, Liberia 0.5 MTPA, Ghana 1.5 MTPA, and Congo-Brazzaville 1.5 MTPA. Operations in 13 countries and trading operations in others. Export strategies fully operational and trading within African trade zones. Operating in robust growth markets, well-diversified regional exposure, leading sub-Saharan African producer and large-scale producer with superior profitability and strong cash generation. Opportunity at DANGCEM's disposal remain huge, as research confirmed that urban population of Africa will grow by an estimated 865 million people by 2050, while increasing political and economic stability, robust GDP growth across Africa, emerging middle class and consumerization, steady population growth, younger profile, rapid urbanization, and serious housing deficit will be key drivers to help the firm reap the gains of its expansion plan. On Monday here, September 2014, a total of 243,540 million units of Dangote Cement Plc at 200 naira per share, valued at 48.78 billion, were traded as an off-market trade. This remarkable trade between the seller, Dangote Industry Limited, and the buyer, Investment Corporation of Dubai, was executed by Meristem Equities Limited and represents the largest single trade on the Nigerian Stock Exchange since 1997. This is the second time a government-owned investment entity will be investing significantly in the cement firm, as the Public Investment Corporation of South Africa bought a 293 million stake in the company, while the latest deal by the Dubai company may be one of the company's sources to finance its expansion. Let's hear from the group managing director.
We ensure that wherever we go, the community is happy with us. You have the best quality product at a very low operating cost. So it will be very easy for us to take the market shares from various other competitors because our cost of production is quite low. And I would like, before closing, I would like to give you a brief picture of our strategy in the Western Central Africa and the Eastern South Africa. The Western Central Africa, as you can see, it is all coming under the ECOWAS region, so you can move the production from one country into another without any duties. And if you leave Nigeria right up to Senegal, there is no country having adequate limestone to put up integrated cement plants of reasonable capacity. So all those countries have to be dependent upon the imported cement or imported clinker. So we have made massive investment in Nigeria, we have made investment in Senegal. So in the countries in between, in Ghana, Ivory Coast, we are putting either cement grinding plants or cement terminals. So we are in Ghana already, we are expanding. We are putting a new plant in Ivory Coast, Liberia, Sierra Leone, Cameroon. So all these areas, the excess capacity from this place can be taken in. And if the market demand in the local countries are growing, then we can also bring the cement or clinker from outside. So first of all, the question of if we keep on expanding massively like this in Nigeria, whether we will get into a situation where we will find it difficult to sell. No, we have an exit strategy. So if the consumption is growing well, we can sell it locally. If the demand is not growing to that extent, we have an exit strategy to take the cement and the clinker to the neighboring countries. In the next couple of months, Cameroon is getting commissioned with 1.5 million tons of cement capacity. Ghana is already operating on 1 million tons. So these are avenues where we can take product out. And so this is the strategy. And if you see the investment in Congo, we just crossed the river and we are into Kinshasa. DRC is one of the countries we are hesitant to invest today because of the poor legal structures, but we can move the cement into Kinshasa and into Cabinda from Republic of Congo. And the next slide tells you about the various capacities and our investment costs in the Western Central Africa. And I'll take you to the next slide where the Eastern Southern Africa, the strategy is explained here. As you can see, Zambia, I explained our concern about investment in DRC. Zambia, DRC, the biggest consumption is either in Kinshasa or in the Katanga region, which is the copper belt. So we are just next door, 20 kilometers up from the border of DRC in Zambia. So most of the cement can straight away go into the DRC, into the copper belt region and the cobalt belt region with a very high consumption. And we are also planning for a new plant very close to Lusaka. And you can see the South African investment can also get into neighboring countries, including Botswana and Zimbabwe. And Tanzania, we are right at the ports. The company can feed into Mozambique, and it can also feed into Madagascar, Mauritius, and all the Comoros, Indian Ocean Islands, right up to Seychelles. And the Kenya can take the cement into Uganda, and Ethiopia, and South Sudan. So we can see how the cement flows would be. So in no country, we would be just totally depending upon the local market, and we would get into a situation of sales constraints.
The following AGMs are upcoming in the market. Guinness Nigeria PLC is expected to hold its AGM on the 13th of November 2014, Honeywell Flour Mills on the 16th of September 2014, and 7-Up Bottling Company PLC on the 24th of September 2014. The following companies have declared corporate action. Guinness Nigeria PLC declared 320 kobo with closure date set for 13 October 2014. Honeywell Flour Mills PLC 17 kobo with closure date set for 10 September 2014. And Nigerian Energy Sector Fund declared 32 kobo. On announcement in the market, Qatar National Bank acquires ETI shares. Qatar National Bank announces that it has acquired 1,767,612,630 million ordinary shares and 732,277,056 preference shares in the capital of Ecobank Transnational Incorporated. The acquisition is QNB's first acquisition of shares in the capital of ETI. SEC announces 15 billion Bauchi State Bond application. The Commission, as the apex regulator of the Nigerian capital market, is empowered by the Investment and Security Act, ISA Cap 124, laws of the Federation of Nigeria, 2007, to regulate and develop the Nigerian capital market. Consequently, the Commission is making this publication. Section 223, subsection 1 of the ISA 2007 states that a body to which this part of this act applies may raise, from time to time, internal loans for any specific project authorized by the approving authority of the body in any one or more of the following ways: A, by the issue of securities in the form of registered bonds, or B, by the issue of securities in the form of promissory notes. Pursuant to the provisions of Section 223, subsection 1 of the Act, the Bauchi State Government has applied seeking the approval of the Commission to raise funds through the issuance of bond in the Nigerian capital market. The Commission, in ensuring a fair and transparent market and in public interest, hereby publishes below the details and proposed utilization of this bond for comment from the general public. A breakdown of the proceeds usage is given below. 1. Completion of International Airport, 5.484 billion. 2. Completion of Specialty Hospital, 2.030 billion. 3. Refinancing of bank loans, 6.338 billion. And 4. Estimated cost of issue, 1.148 billion. Total, 15 billion naira. 1.3 billion unit of Ashaka Cement crosses to Lafarge Africa PLC. A total of 1.3 billion ordinary shares of Ashaka Cement Plc at 30.95 kobo were crossed via off-market trade. The buyer was Lafarge Africa PLC, while the seller was Lafarge Nigeria UK PLC. This is part of the ongoing process to consolidate the South African assets and the Nigerian asset. SEC suspend Marvin Asset Management Limited. This is to notify the general public that Marfin Asset Management Limited, its directors, and sponsored individuals have been suspended by the Securities and Exchange Commission from all capital market activities with effect from August 29, 2014. The suspension is as a result of the operator's failure to carry out its investors' mandate to purchase 200,000 units of National Sport Lottery PLC during the company's 2008 public offer, for which it collected 3.1 million. This information is to warn intending investors from engaging the aforementioned operator in any capital market transaction pending when the firm's suspension is lifted by the Commission. That's all we have for you in this edition of the Nigerian Investor. I remain your regular anchor until I come your way again next week. Bye for now.